Do you invest in emerging markets? They were all the rage not long ago, and they will sure return one day. The first emerging market bubble popped 200 years ago in London, which had just overtaken Amsterdam as the world's financial hub. British investments into South American mining companies, and lending to the new republics that broke free from Spain, exploded in the 1820s. A financial bubble inflated in London, as stocks rose threefold in months. But the world's first emerging market bubble popped in 1825. Will we see another emerging market bubble again? Most probably yes, and you'll be prepared by then. We will start our account of this bubble with its context. The opening of British trade to South America in 1809. As part of the Napoleonic Wars, the War of the Fifth Coalition ignited in 1809. In this war, Britain sided with Portugal and Spain, which had most colonies in South America. Historian M.J. Fenn explains that once South America was open to British trade, commercial ties developed quickly, and trade volume exploded. By the 1820s, Britain had established itself as the dominant trading partner in Latin America, particularly in Brazil and Argentina. The early 1820s marked an economic boom in Britain. The boom was fueled by low interest rates and a surge in capital markets, especially in South American ventures. It was history's first emerging market boom. Scholar Sean Fulmer notes that the British economy grew by 25% from 1819 to 1825, as trade rose by almost 50%. At the same time, country banks outside London helped inflate a stock market bubble by financing stock market purchases. Fenn explains that the speculative frenzy in South American mining peaked in 1824, as 44 new mining companies were formed in London, with over half focused on South America. Historian James Taylor notes that this period coincided with the birth of the financial press in the UK, as some weekly newspapers began to experiment with carrying more detailed market reporting in the early 1820s. In the 1810s, South American states declared independence, as seen here. Historian Larry Neal explains that bond issues for the newly independent states followed. The London Stock Exchange became the dominant market for financing new Latin American states. The volume of lending was very high, £1.4 billion in today's money, according to Fenn. In the province of Buenos Aires, the annual debt service cost was 13% of state revenues. What would happen if commodity prices weakened? Stock prices fluctuated wildly. Some stocks reached premia of 200 times par value. The public was drawn into speculation with deceptive practices, including hiring influential people to tout mines, exaggerated investment prospectuses, and paid writers to create favorable narratives. The bubble inflated quickly. In late 1824, stock prices jumped from 140 to 400, almost tripling prices in a few dizzying months. But it all ended equally as fast. Michael Bordeaux writes, "It is unclear what caused the crash. But the collapse of stock prices in early 1825 triggered commercial failures. By autumn, a number of country banks, which had lent money to stock buyers, also failed. When several important London banks failed, a full-fledged panic ensued in December 1825. Stock prices collapsed by 2/3. A year later, price levels were back where they had started. The world's first emerging market-induced financial crisis was on. Fenn explains that 104 banks went bankrupt. Workers, especially handloom weavers in Lancashire, faced acute suffering and unrest. Many people were unable to pay for basic needs. Larry Neal explains that the Bank of England's actions during the crisis were criticized. Its discounting practices and high interest rates contributed to the liquidity crunch. And the bank's failure to act as a lender of last resort worsened the economic fallout of this financial crisis. Our verified sources are here. Write to us in the comments section if your interpretation is different, or if you'd like to suggest other sources. What do we conclude? This is the world's first emerging market bubble. As seen in our channel before, the Minsky anatomy of a bubble seems to describe such events well. It also seems to fit with 1825. Many other emerging market crashes have followed since, including the 1997 Asian financial crisis. Are you ready for the next one? Our takeaways are similar to the ones we've seen in other bubbles. The Minsky model encourages us to be wary of spectacular price jumps. Next, avoid leverage. You do not want to borrow money as the bubble inflates. As it pops, you will go down hard. Thank you for watching. If you'd like to see more financial history from verified sources, subscribe to our channel and join our community striving to learn from the misfortunes of others.